the primary silver producers. I mean, there's a reason they've all become gold companies. That to produce primary silver at these prices with where costs are now, it doesn't work.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics as we dig on in and continue covering some of the events in the silver and economic world. No shortage of developments over the past couple of days. According today on Tuesday, March 14th, we had the CPI reading out this morning, which came in mostly in line with expectations. Of course, we've had some runs in the banking sector and a lot of chaos there, Fed and the FDIC guaranteeing the depositors. So a lot happening. And fortunately, to join me and dig into that, as well as how this plays out and affects the silver world, is Steve Cope of Silver Viper Minerals. So Steve, great to have you back on the show. And how's everything going today?
Yeah, it's going well. It's nice to see metals prices have rebounded a bit here the last couple of days. It was pretty rough there for a few weeks, but it's a very interesting world we live in, Chris, with what's going on right now out there.
Yeah, well, fortunately, I mean, a lot of the things that are happening are not hopefully coming to a surprise to everyone out there. I mean, you and I have talked about that a lot over the past couple months, where the Fed raising rates aggressively, and the school of thought being that they raise rates until something breaks, which seemingly happened last week. And let me pull up today's silver chart. Again, we're recording on Tuesday. Silver had a big day on Monday in response to the events of the bank run at Silicon Valley Bank and other trouble in the banking sector. And I guess a place I like to start when we dig in, we've seen quite a bit of action as going back to the fall, September and October, silver down around $18, got up to about 24 and a half. I'm wondering, after a rally like that, if some pullback was to be expected, and we did see that, and now right under $22. So curious, any thoughts you have on everything that's happened over these past couple months, which leaves us at $22 or so today?
Well, I mean, I still come back. I mean, the price is still way too low. It's it, it doesn't work for the primary silver producers. I mean, there's a reason they've all become gold companies. That to produce primary silver at these prices with where costs are now, it doesn't work. So if you don't have other metals in there, the companies are losing money, and gold. I mean, the margins on gold are getting tighter and tighter, and we're seeing companies out there starting to report costs that are having them barely break even. So it's something that has to happen, and it has to move up. It's nice to see it after that pullback to start pushing back up the right way. But we've talked about $30 silver for a very long time, and I think that's kind of, if we're going to start with a number, it's got to be 30. When we're talking about the supply side, the stackers and people that are just collecting, obviously they can trade off of their entry points. But if we're going to start meeting the supply demands that are needed here moving forward, for electric cars and for solar and for the infrastructure, these prices have to move way up from where we're at today.
Yeah, and obviously you mentioned that a lot of the silver coming as a byproduct of other metals. How do you think that some of these companies, if the price is ruling out primary silver projects, how does that dynamic play out? Obviously, it's not like people are going to start mining more copper just specifically to get silver, but where do you think that leaves us? Does that just continue to exacerbate the gap, or if we have a silver price that stays around this range, 22, $24, how does that play out with the silver supply? And how do you think some of these non-primaries are? I know they're not necessarily up at night thinking about that completely, but how would that play out in the silver supply?
I mean, at 22, it's not gonna, they're not even gonna be thinking about silver. It's a nice byproduct. It's great, but they're gonna be focused on their primary, metal, whether that's gold, silver, zinc, whatever, whichever, mine we're talking about. Silver at $22 isn't gonna move the needle. Like you say, they're not gonna ramp up and really target and hope that they can get a bunch more silver based on those prices. Now, if you start again, if we move the needle to these much higher numbers, then then they may start to focus on their mine plans and change things to make sure they're, whether it's a metallurgical thing or going through a secondary circuit, if it makes economic sense, there's things they can do then. But again, we need much higher prices for it to move the needle for the big mining companies. And then counter to that, though, again, as we go back in the supply, like you say, we're already operating at a deficit. We're, year by year, it's an exponential growth for the demand for silver and what's needed, across these various industries. And you're not seeing the investment into the juniors right now. You're not seeing, the mining companies bringing on new primary silver mines. So you keep saying, where's the supply going to come from? And it's not going to come from anywhere. It's just the deficit's going to grow and grow until we get to a, appropriate pricing that's sustained and gives the mining companies confidence to, start to bring on these new projects that require much higher costs.
Yeah, and interesting, you mentioned that deficit, which last year we had heard was 194 million ounces from Silver Institute, and they actually revised that up to 253 million ounces. So, I mean, we've talked about the factors of what is going on and that the silver price would seemingly have to go higher to meet that. Yet, aside from the theoretical, what do you see actually happening? Do we get to a point where there is a shortage of silver? Because again, even if we had the price 30 or $40, there's that time gap between when any of those projects get brought online. So any thoughts on, I mean, are we going to be a couple of years out from now and just we're holding back what we can do in the world, or what
Well,
do you
I
think
think,
is actually
yeah,
going
I
to
mean, I think that's the worst case scenario is we just wait until there's no silver and then all of a sudden it's, okay, this is what we have to pay to get it. But it comes back to the silver industry has been its own worst enemy, the producers. I mean, they've never been able to get together and say, look, this is what it actually costs us to produce this. This is what we're going to sell it for. Instead, they are controlled by the paper market and that pricing, and they just kind of, cannibalize each other and compete to see who can lose the least amount of money. Or, in the case of the large silver producers, they're gold companies now. The new assets and the new projects they brought online weren't primary silver mines. They may not have had silver in them at all. Some of them have gone with some base metals. There've certainly been heavy gold content across the board. I think Pan American's production now is somewhere around 80% gold,
right?
and that's the number two silver producer in the world. So, it's not a silver company anymore, it's a gold company. Um, that's going to have to change. But like you say, there's that gap in that timeline from, financing, the early stage juniors, because these big producers are terrible at finding new deposits. They've historically never been able to do it. So they rely on smaller companies like ours to step in and de-risk early stage assets to a point that they're willing to buy them. But again, there's not a lot of assets out there that even, have a decent resource right now that will move the needle on silver. So I don't know what's going to happen. I think before we get to that point of, look, there's just no silver, we've got to pay more. I mean, I think you're going to have to see, even the paper market's going to have to allow the price to run because there is all this demand in the world for silver. So we'll see what happens. But if we do wait till it gets down and we have nothing left, then I guess you're going to have quite the dramatic spike in silver as people fight over those last, few ounces that are left, and while they wait for something to come online and start, increasing the supply. But we've talked about that. There isn't. It's not out there. It's not out there in any of the undeveloped projects. You've got a couple of large silver deposits in the world, but most of them are in jurisdictions where, like Pan American's Navidad, never, we're probably decades away from that ever seeing a government that's going to allow an open pit that's going to, mine that project. They've got Escobal that at some point, politically was a mine and existing. That's a large, bump in silver for them. And that one will probably see in production sooner. But again, it's not going to happen tomorrow. If you're talking about, undeveloped large silver assets, they need, the ones that I'm aware of need much higher, again, what we've talked about, cost to make it make sense economically. You can go down, to projects like ours where we've got the gold and silver, but if you're talking about the world supply of silver and what's needed, it's a very, very small dent relative to what's needed for these various industries. So again, whether it's, the Dolly Vardens of the world, projects like ours, they help, and they're, they're a good bump, and they're certainly going to be very attractive takeover candidates for these companies, but we need, those times 100 times 1,000 to get, running to start to meet that supply. So it's going to happen. We know the metals prices are going to go up. It's just a question of timing, and when, the powers that be allow that paper market to move, whether they position themselves that they're going to make money on that trade as they allow those prices to go up. Are they holding it down to acquire more of the physical on the gold and silver side? Is that why we keep seeing, every time all the fundamentals say something should happen and things start to move, they get hammered back down? Is it because we're trying to replace the gold ounces and the silver ounces that have been, lent out or are supposed to be there on the books that aren't there? I don't know. But at some point, those banks are going to align themselves, and they're going to say, now's the time to make a ton of money off of physical silver and the price of silver. And then, we'll all benefit for that. So, and I think that'll happen before they allow it to get to where there's just no ounces in the world.
Yeah, and along those lines, I hear a lot of the people that I talk to on the show throughout the silver industry say that most of the easy deposits have been found and that it's just getting harder to find good projects. Is that match what you've been seeing? Again, obviously the price changes what is a viable project or not, but are there still deposits out there that even at a right price can make a substantial difference?
There are a few, but they are. I mean, silver tends to happen high up in the systems, and the stuff that's at surface is easier to see. You can go and you can sample outcrop, and you go sample various things. There's lots of probably silver sitting there that's undercover close to surface, but again, economically, how are you going to find it? Now you've got a unit to start. You could run geophysics, but geophysics is extremely expensive to show you a potential spot. But if you don't have those obvious outcrops, you're either going to get lucky drilling for something else, or it's good. They're hard to find. So you can go into, we have jurisdictions in the world that haven't really been touched for mining, but there's a reason they haven't been touched. Politically they're very unstable. If you do find something, you're probably going to get your project taken away. So there's some supply that could be done at some point. If I know, those types of jurisdictions tend to be the bigger companies that can move in and have the ability to do business in those, because they've got much deeper pockets to get stuff done. But there are some jurisdictions that you could bring on some supply of silver. But if you're talking about, the traditional countries where silver comes from, Mexico being number one, it's got a rich history, and there's still lots more silver in Mexico, but it's harder and harder to find. And so, the premiums on those good assets that can make money down at these prices. And again, I would say the ones that are going to make money down at these prices have to have a second metal, probably gold, maybe a copper if you can find a big porphyry. But yes, they're much harder to find. And so there's less and less companies out there that have viable silver projects right now when you look at the junior space.
Yeah, it is going to be an interesting environment to see how that all comes together. Not not the easiest thing to do. And of course, in the meantime, we have inflation numbers which are still well above the 2% Fed mandate. Again, on Tuesday, the CPI came out and was 0.4% in February, 6% from a year ago. So still well above the Fed's mandate. And I'm wondering, do you see an environment where, I mean, right now we have this whole, if inflation is high, that means the Fed is going to raise more. So we often see the metals sell off. But do you think we get to a point where eventually it stops mattering what the Fed does? And if prices just keep going higher, that silver decouples from the current school of thought and just starts trading higher in response to people being concerned about what they're seeing with pricing?
I think there's a couple things in that. Like one to me, I think silver is in its unique point in it, and we've talked about this in the past, but it is in a very unique spot in its history, in that silver has always been tied to gold. It's always been, on the way up, silver outperforms gold, on the way down, it gets hammered way worse than gold. But that's because silver's always only been treated, on the monetary side. And this movement now and the uses and the demand for silver that we're talking about really start to, silver's always going to have the monetary side, but but the industrial side for silver now has grown so much, more than it's ever been in its history. Obviously you go back and it was used in film, but that was still such a small dent in, what silver was in a year. And now all of a sudden, like you said, with this green movement and solar and medical and infrastructure, everything you can come up with, and all these uses for silver, that is why we're at this deficit that we're at. It needs to start trading differently. It needs to start trading based on its industrial uses combined with the monetary side and the demand, the people that are stacking, and that way, that's a huge side of silver still that's taking, supply, but it's this industrial side and how that's going to grow that's going to send silver prices, exponentially higher, unless we get back to currencies that are backed by gold and silver, and we need to, because based on the supply we need prices to be, extremely higher. But both scenarios, you need silver at, substantially larger prices to make it work. So I think, yes, there's going to be a decoupling that. And again, I mean, I don't have any faith in the Fed. I don't think a lot of the people here listening, have faith in the Fed. I've said from the start on this, and I'm, as well as a lot of your other, people you bring on the show, but this inflation and what they're doing, raising rates to stop the inflation that's actually happened, isn't going to work. That they've had, they can come out and it can announce, okay, fuel prices came down, so it's great. We can manipulate that price and we can say inflation's slowing down for a few months. But the average person, I certainly go to a grocery store and you can't tell me that inflation is slowing down. Month by month, everything costs more and more and more, and more people are going paycheck to paycheck or can't afford, they're not even that. They're going under. They're selling their homes, they're doing what they can to cash out to keep getting by, but they're not making enough, because salaries certainly haven't gone up over the last 5-6 years for most people. People are taking second jobs, third jobs, they're getting their spouses to work just to get by. They're having less and less kids, because that's being a parent of two is very expensive, especially in this world. So again, I mean, we need prices to go up, we need salaries to go up, and we need, it's not happening. It's this, there's this Fed, and what they're doing is not slowing down what's affecting the average person. They can manipulate their numbers and say different things are happening, but even they have to come out and finally acknowledge that, inflation is still going up in spite of what they're doing. So let's stop raising rates, because it's just, now all of a sudden we're shutting down banks. We're putting people that have mortgages, and we're making those interest rates so high that people can't afford their homes, and they're going to start selling, and setting up for another real estate bubble potentially. So no, I mean, at some point we just got to start ignoring them and focus on the fundamentals.
Yeah, I understand what you're saying. It's not an easy predicament, and I guess that's why there's a lot of people who've been warning about the 0% and quantitative easing policies for the past decade, because I don't know if there is an easy answer now, and that's why I think a lot of people are saying, hey, we shouldn't have been doing this for the past decade. And now, sure enough, you have rates go up and there's problems in the banking sector. Curious if you had any thoughts on what we saw out of Silicon Valley Bank over the past week, where just stunning to see a bank run, especially unfold that quickly. And it was interesting. I did talk with a physical dealer on yesterday's show who was mentioning that in terms of a single day, what they saw on Monday and perhaps late Sunday night may have exceeded even what they experienced during Silver Squeeze. So a lot of people concerned out there, and certainly turning to gold and silver. So any thoughts on that?
Well, I mean, again, we've kind of talked about it. If you keep raising rates, something's going to break. And so they had kind of gone into the end of last year saying, oh, maybe we'll slow down, and then all the inflation numbers were still up, but we're going to keep raising rates, and all of a sudden you have banks shutting down, or these runs happening, and hopefully that is the trigger here that says enough's enough, we can't raise rates anymore, or we're going to see more and more of these. And so that's been very interesting, to watch right after they spoke and said, no, inflation's still up, we're going to have to raise rates more than we were previously expecting. And I was pleasantly surprised up here in Canada to see our bank even before that, say, no, we've been aggressive, we're stopping. So hopefully the US follows suit on that and metals prices can get back to, a normal environment. People can get more confidence in it. But, it goes while you're watching, basically the US shoot itself in the foot and expedite the fall of the dollar. I'm sure the BRICS nations and Russia and China and as they're setting up currency and saying we're not going to be trading in US anymore and creating our own currency, they're laughing. This is exactly what they want. And it's just further escalating the rate at which the US dollar is going to get replaced, at least, as the only, trade currency of the world.
Yeah, we didn't even touch on that, but in the midst of inflation high, banks melting down, then you have the whole de-dollarization thing, and certainly not the ideal portfolio of circumstances out there. So I guess we buy some silver and pray is maybe the way to handle this one. And uh,
Well, again, I mean, the people have been doing that for years that watch your videos, so they've had the right idea. I mean, they're seeing what they were predicting slowly, or maybe not so slowly, unfold before their eyes, and why they were doing it. And now it's just a matter of watching the value of that silver go up. That's the one part that's really been missing in the whole mix. Is
yeah.
everything they're predicting is happening, and all the fundamentals get better and better, and at some point, we're all going to get heavily rewarded for this industry and this investment focus that we all have. It's just a matter of time, and again, I think it's coming a lot sooner than it is later. But we've also been saying that for a while, and oftentimes some of these things are out of our control, but it's going to happen. And like I said earlier, it probably happens, as these banks have aligned themselves to make sure they make a ton of money off when it does happen. But it will happen, and people, and when it does happen, these runs aren't quick flash in the pan runs like they are, in a lot of the other commodities. When gold and silver take off, it tends to be, multi-year cycles, and the amount of wealth that is created during those cycles is amazing. It's people that haven't been through them, you can't appreciate how much wealth can be created quickly in gold and silver when you get into a bull run and everything's allowed to work the way it should.
Yeah, well, it certainly seems like the conditions are in place. I mean, tack on a debt ceiling debate coming up. I guess we've already hit the trigger on that. Now they're doing the accounting fraud to extend that. No answers that I've heard on the funding of the rising interest expense as well. So certainly quite a bit going on out there, and we shall see how that all unfolds. Although, Steve, before we wrap up, was wondering if you could give us an update on how things are coming along with Silver Viper and, in particular, the Canasil deal, which you've had some updates on, and perhaps you could catch us up to speed there.
Yeah, as far as the Canasil deal, we did our due diligence. The projects are very attractive, but we found things that we weren't happy with within the company. So we decided to walk away from that deal. We're still open to doing, something on one of their projects. We want to, right now, we've got a financing out there that we're working on. Once we get that financing done, then we would possibly look at, a very cheap transaction on one of the Canasil assets. But it's why you do your due diligence and why you dive in is, as great as all those projects looks, there was things liabilities and that we weren't willing to take on as a company, especially in this market. So we had to unfortunately walk away from that transaction. We've always said, even through that transaction though, that La Virginia was our flagship and our main focus. We've got a resource that we've already would have expanded on. We're planning on, coming out with a new resource probably towards the end of this year. I believe that resource hopefully will take us over that million gold equivalent ounce or 70 million silver on that resource would be the target when we do that resource. But we've expanded El Ruby already by 300 meters to the south. With our new geologist who's looked at the old resource, has a lot of ideas how she's going to bring in a lot of the high grade ounces that were left out of that resource into a new resource. So I would expect the grade to increase while adding ounces to it. So excited to have that potentially come out at the end of the year. We know with this financing, and we would budget a 5,000 meter program to start, just to get us going again, drilling and testing El Ruby at depth and along strike. And then also our number one exploration target at El Molino that we've, through this large mapping and sampling program we've been doing on the project for the last, 6 to 8 months, that target just continues to impress us, and we think we have a potential for another El Ruby at El Molino. So again, lots of potential for new discoveries. We're gonna, catalyst with a new resource, drill results around El Ruby, and expanding on the existing resource. So it's a very attractive project. It just, this market, when we were at a point of expanding, the drill program, we had to slow down and just be cautious of what was going on in the market. It's convenient you have that slide up as well. You can see that final payment. We're in the act of renegotiating that at the moment, so I would expect that the cash component of that comes down dramatically as well for this year, just to again make sure the money goes into the ground and is spent on where we're adding value. And we've had a great partnership with our guys on those blue claims in Mexico, which is what that payment's on. We own the red claims 100%, but they've been really willing to work with us. We're working through negotiating on what the new terms of that will be. We'll probably get staggered over a year or 2 years additional, and with a lot less cash component to it and more shares. So be excited, stay tuned, and look for a press release on that at some point, but we're working on that as well, just to make sure again that we're adding value in the project where it belongs and conserving as much cash as we can for drilling and those, that area and aspect of the company.
All righty. And Steve, any final thoughts, and also where people can reach you guys if they have more questions on the project or anything else that you're doing?
Yeah, all our contact details are on the website that Chris has got pulled up there, www.silverviperminerals.com. You can reach out to us. All of our phone numbers are on there. Email info@silverviperminerals.com is a great way to get a hold of Alicia or myself. But yeah, please feel free to reach out and ask any questions. We're still in this market, and if it's not, one of the Canistel assets, we'd be interested in acquiring another early stage asset to complement La Virginia. But no matter what, La Virginia is always still going to be our focus. This is a special project. We talked earlier in the video about all the things happening in the world and how few projects are out there that have exposure to silver. In our case, it's about 40% silver, 60% gold. Very, attractive open pit heap leach operation to start, and then going underground in our high grade structures afterwards. So again, stay tuned. There should be lots of news flow this year. You can invest in it at a price that I never thought we'd be back to, but again, it speaks to the market and where we've been at. So again, I think it's an amazing time if people have capital to deploy. It's one of the companies they definitely should be looking at.
Well, appreciate you joining me again as always, Steve, and certainly a lot going on out there, and good to see that even in the midst of a tougher time in the silver market, moving things forward, and hopefully get that new resource out later this year, and people can find out and get questions answered at silverviperminerals.com. And we'll look forward to catching up with you again soon, my friend.
Sounds good, Chris.